Okay, so subject matter here you can read, right? Is a big deal. Big deal that's happening. This is us. Who you guys, if you don't know, we are Greg Goosmann and Beth Cramer of Goosmann Rose Colvard Cramer. Greg's been practicing 35 years here in the area, myself 19th year, real estate. And we have 3 offices and growing still, north in Weaverville, downtown, and South Asheville. That's just because everybody likes to be where they want to be. So it's for convenience for you and your clients, drop off, pick up, anywhere.
I said something about that too. If I had this happen where husband's working in Henderson, wife's working in Madison, and they're all frustrated, how are we going to work this scheduling out? It's okay to break them apart. We have the wife go to the Weaverville office, the husband go to the Weaverville office. The paralegal might be working at the downtown office, or that might be the most convenient place for you to pick up your check, for example, or ask us to wire it from or drop off something. I mean, you keep the big things where the keys go. Just let us know where you're dropping off so we can make sure we get them to the place of time. But it can all be merged together. I mean, so we've got a north, south, and middle, and that's just why we have it. And it helps open up the county, given the traffic the way it is nowadays. It's because this county's changed a lot since I've been a little kid here. And it just makes it easier for us to be able to reach out and help make things run smoother for your clients, so they don't fret so much. Because I know that real estate can be a business that people fret with it.
So speaking of like our effort to make things smooth, that's why we're here, is to help everybody be able to get through this big change. So the FinCEN is a federal organization, and it has enacted a new rule about residential real estate transactions that are particularly in a cash or non-finance situation. The history of this is because this is anti-money laundering, anti-embezzlement protocol, which is not covered under non-finance transactions, because we all know conventional lenders are subject to federal laws already that govern that. So you think of like Bank of America, Movement Mortgage, Wells Fargo, they already do that when they underwrite everybody for financing transactions.
They're required. I wrote that down last night in my notes to myself. They're all the big banks, they have to require, they're called the AMLs, the anti-money laundering. They have, if they submit that kind of reporting, which is the SARs, suspicious activity reports. If they have to comply with those requirements, then this does not apply. So if someone's getting a loan from a lender, and you have the right to ask that lender to identify, are you an AML lender? And if they say yes, then this is not an issue. If they're not an AML lender, we're back to filing a report.
Yeah, so this is just a little bit of the why this was enacted. FinCEN itself is the Financial Crimes Enforcement Network. It's a division of the U.S. Department of Treasury. I don't know if any of you experienced the Corporate Transparency Act that went into effect last January of 25. That was under FinCEN as well. That tried to make everybody who owns a company disclose all their beneficial owners of the companies themselves. Challenged constitutionally, currently injunction on hold. But we all complied with it for a period of time in the beginning of 25. Same division, same organization, now here trying to get at real estate. For the reasons that you see here, they're estimating that 20 to 30% of all residential transactions are happening in a cash or non-finance structure. And so this is to try to get at the money laundering that's occurring. And feds have all these references to the amount of money that's being put through real estate. Think of shows you've seen like the Animal Kingdom or series where you just see these like drug money. They're always washing it through real estate, right? Washing it through real estate. So this is where they're trying to get toward getting owners' information related to these transactions to enforce, their anti-money laundering and all of our laws in the country for that.
And 20 to 30%, I was going to put on that's, I know we see a lot of them, but it doesn't just mean if it's a cash deal too. It can be a hard money loan. It could be a seller finance transaction. We're going to talk about that in a second as well. Mm-hmm. But yes, there's other things that still make it qualify or it's just a non-AML lender that's making the loan, which is basically a heartland lender in most cases.
So the synopsis of it is the rule is going to make us, real estate professionals involved in closings and settlements, file with the federal government, the FinCEN, what they call a residential real estate report. The reportable transfer you see here is defined as a non-finance transfer to a transferee entity, buyer entity, or trust, right, of an ownership interest in residential real estate. Okay. So those are the three big yes, must report components. Okay. So we can break these out. Greg, you want to go into residential?
The residential, basically 1 to 4 family units, and it gets into land upon which someone might intend to at some point have a 1 to 4 family unit. So if they're going to be building a house on it, it can be, say someone's, and I read through this last night, someone's buying it as a developer and they're going to hire a builder to build upon it, or they're going to subdivide it to build upon it. Again, all these push requirements. And what it boils down to, just like we're going to have to do, you're going to be presented with, does this meet the need? And we're going to have to go back and look at it. And they've got a bunch of little triggers of this, then this, this, then this. And there's like, if you say yes to this, then this, and lots of times it's a maybe. So we're going to go through a chart for that. A unit that's principally occupied, so we can give unit principally occupied by occupancy by 1 to 4 families, land with agricultural uses that has a residential home. You find a lot of farmers that have a house on it, and actually see people doing 1031 transactions where they cut out the house and sell the house, and then they finance the land. Again, we're looking at situations. If it's that way when they're selling it, we're going to be filing a statement. Mixed-use properties with a residential component. It could be a commercial tract, a commercial building with a condo. Mm-hmm. The condo
or apartment building or any residential,
with 4 units. Yeah, yes.
We're focusing on residential, or is there something, there are already stopgaps in place for commercial?
That's what I'm presuming, yes.
That there is some suspicion that they are going to also come down with a different set of federal regs as to the commercial component. But I think it is the propensity. I think there's a higher percentage in the real estate market of them being non-financed. A lot of commercial properties are typically financed. I don't know the percentage, but I would guess that's why they're going to try to maybe do that at a different level. This is the biggest group, I think, for them to review first. But that's a good question.
Mr. Big probably thought about it and has figured it all out.
And remember here, this is not that it's going to make a liability on our clients. It's just that we have to do a reporting requirement. Okay, does it make a tax burden? Does it make a financial burden on them? So the duty here is just, if we know it is going to be residentially used, share it. Because then it's better to report. We'll talk about later, there's federal crimes, federal like charges and penalties for not doing this. You don't have the penalty for being honest, doing it. You have the penalty for not doing it when it's necessary. Does that make sense?
But it's here, which is why we've got to deal with it. And it's going to be a headache. It's going to, at some point, it'll be old hat. Pay on this. We're going to have that. I need this information from you. They're going to be asking me for it. You're going to have to be preparing to gather it. There'll be forms, I'm sure, that'll everyone's be fill this out, give it to us so we can give it to them. This can be filed.
So then the second yes we need here is first residential. Second is that the buyer is an entity or a trust. So that is any version of entity, right? Think partnerships, corporations, LLCs, any version of an entity there. Trusts, there's some exceptions to all of these, but fundamentally trusts are going to be obviously anything that's a trust agreement. Land trust, revocable trust, exemptions here, which we'll talk about in a little bit, or if it's an estate planning trust, that's not going to be a requirement. But there's some limited exceptions, but just think if it's trust, it's a trigger to let us know. Trust, it's LLC, corporation, let us know. It is also if any portion of the property, think 1%, 0.1% is owned. Think of an estate maybe where an LLC acquires or is going to acquire a little interest in the property and then it has it, or they want to buy and it has a little interest in an entity or a trust. So it's just fractional ownerships as well, where this is going to apply.
That's possible. I had that happen yesterday where mom had a trust and she wanted her son to also be on title. even though he's probably a beneficiary of the trust.
Right.
But she put the trust and some, boom, that's going to qualify.
And then the third, let's say just element or requirement is it has to be what's called a non-finance transaction. So they used that term specifically because we're not just talking about, as Greg said, just cash. This is going to be obviously cash transactions, but then also, like Greg said, it's going to be any type of financing that's not already governed by the ALA, anti-money laundering, and whatever the other one is, the federal embezzlement, federal laws. So if they don't have those protocol at that financing institution, it's going to be what's called a non-finance transaction. So easy ones are going to be cash purchases, private lenders, think Alfie, think
That's obviously
any other private lender, seller finance transactions here, right? Because that's not a money laundering protocol. And then also it's just going to be anytime we transfer title into an LLC, right? Anytime we transfer title for no warranties and no purchase price. So it's going to just be this kind of fussy component on lots and lots of transactions that we do. Exemptions, I already talked about, there's going to be a long list of those.
We've got them here, easements, for example. No, we're not doing this for easements, we're not doing it if someone inherits the property through their estate. You're not doing it if it's a domestic where they're separating the property because of a divorce, or it's a bankruptcy and they're transferring the estate to a trustee, a bankruptcy trustee, court-ordered transfer, transfer for no money by an individual to a trust in which the individual they're both the seller, or it's a 1031 exchange.
So that's the estate planning based trust right there.
The buyer is the feds. You know, it could be HUD, it could be the VA, it could be all kinds of different federal state agencies. Or when there's no one involved in the transaction, that say that they do it themselves.
Not that we'd encourage you not to close with us, but in theory, if they do it themselves.
They're not on that one. There's a laundry list. We're going to talk about that in a minute, of who has to report and why and where you fit on that list.
Which is more of a us thing as far as who has the duty when we close a transaction. Not, I think, and I think what you guys have to get involved in, but just if they did it, reporting people are listed there. So no closing attorney, no settlement statement, no people who's reporting, no title company, no disbursement agent, no prepare your own thing and record your own thing. It's not going to be one of these reporting requirements.
There is literally a longer list, and then they started who's responsible. This person, if not that person, then this person.
Yeah.
And they work it all the way down to the bottom. Yeah. And you can actually prepare an agreement between you and one person at the bottom. That person's going to have responsibility. And so it can be done as well.
Okay, so if we've met those three elements, right, and a report is required, here's what's going to be needing to be disclosed. So again, it's the buyer being the entity or trust, it's the transaction being non-finance, and it's residential. So the majority of what's involved here is going to be the buyer disclosing their structure. However, the seller is also going to need to report a form. They're individual, it's just going to be who they are, their dates of birth, identification, social security or driver's license, some version of, and if you are, and it has them disclose if they're related at all to the transferee, the buyer, right? It's just so that feds can know it's not a family or a connected transaction.
I'm talking about the trust. This is on both sides. You get trust for the seller, you get trust as a buyer. Mm-hmm. The person who has substantial control of that trust is one person that gets reported. Also, people who have 25% interests as well, or 25% ownership in the trust. So it can be more than just that one person that you have to report for. So it can grow based upon how percentage interest in the property trust.
And so then on the buying side, it's very similar. It's going to be the name, contact of the company itself, who is completing the form, and then the type of entity or trust it is. And then specifically then also the names, like Greg is saying, names and identity of all the beneficial owners and equity owners inside of that trust or that company. And the last part is they have to provide the actual source of funds that are going to be provided at closing. So that's going to be bank accounts and wiring and account information for where they're going to wire the funds. If it's coming out of any of their accounts, if it's financed from the seller, it's going to identify the seller as the financing there for how much. If it's hard money lended, then it's going to identify that financing and then the rest of it. So every bit of the money the buyer's bringing to closing, funded or from cash, need to be disclosed on this form.
And the way I understand it, what's going to happen, we're basically following this form. We get a little note that we complied and they've got confirmation that we've got.
Yeah.
And then we have a duty to save this information for 5 years.
So then it's the, like, what are we going to do? Where are we going to go from here? So I already spoke a little bit about this, but this is effective as of March 1st, 2026. Now, everything always can change, but here's the kind of the outlook on whether or not it will. It was originally enacted to be effective January 1st of this year. It was postponed administratively 90 days because different organizations like American Land Title Association, Alta, was lobbying for definitional revisions here, right? Legislators don't always get specific about things that we need specified at law. And so that got postponed to March. There are 2 federal lawsuits currently challenging this rule. And neither of them they're claiming constitutionality and different Privacy Act violations here, but none of them are pursuing an injunction. An injunction is to legally stop something, right? So because none of them are challenging an injunction, the only way people are thinking this could be extended any further would be if there was more administrative relief, which doesn't appear like it's coming. So odds are very high that this is going to happen and start as of March 1st. We could still see those lawsuits win and these things be denied or challenged, just like the Corporate Transparency Act. So it could start, go on, be stalled or changed, but it's going to start. Most people think it's going to start.
Don't see it not coming. And what does it mean? It's bottom line right here. It's going to be, there's going to be filing charges. There's going to be time involved in putting together. That's the same that the Alta, American Land Title Association, estimates 4 hours of time and all the parties involved in this just to get this stuff together for filing properly.
So I think a big part is just information, isn't it always, right? The moment we hear might be something involved, it's hey, just so you're aware, there's this new reporting rule. We're going to need to know these. You're going to have to disclose to your attorney's office for closing a lot of your entity information related to this possibly this LLC. It's important here also to check where the funding source is coming from. So I know sometimes they'll say they're cash buyers and it changes to a hard money loan, or we just kind of change in the middle of something. The important part is we really need to know to get this out sooner rather than later, right? If we're going to need to do this report. So it's just also, if it's going to meet those elements, you got a real estate transaction, that's an entity buyer, like what's the funding source on this?
We always talk about how we love cash deals, but we be angry, we want, God, we should just go to the bank.
So we said too, is like, if something's changing with either the way they're going to vest title, we have a lot of people that come in last minute and change it from a personal buyer to a trust, personal buyer to an LLC, right? Which is allowed under our contracts, as long as the buyer's the owner of the LLC or corporation or trust. That is where something can change, and we didn't know, right? The buyer's on the contract individually. We need to know sooner rather than later if one of the things happen, because it might trigger this report to be required. We're going to be hustling, right, to get this out and get it done.
Where I see that happen, I've told this story when I teach contract class over the years. I have this happen. I've had it happen at the table before. Someone says, "Oh, I told you to put this dog in real quick and just take it." They want to check for liability purposes. They want to put it into an LLC. They want to put it into a trust. You can just whip them out a deed and knock that out right now. And then, so again,
or there'll be cash transactions where clients come into closing and ask for us to change the deed.
That's what I'm saying. Is that the table? So if you smell that coming, pretty please warn us. You give us a little heads up, because it's otherwise we're sitting there gathering all this stuff and starting, the table and your closing is now going to take longer. Pull all this together, or they're going to come in and have to come back. And then it is, oh, I got to go get this. I got to go get that. And I'm just trying to say, spread that word so that you tell two people and like that brief commercial. Everyone will know before too long.
Yeah. And then, this last one which is the thing, this is just going to change closing requirements. It's going to make more work and more demands on the clients to fill this out and us to get them to fill it out and us to gather all that information. So there is going to be changes to attorney's fees. We don't know what everybody's doing, right? So I think it's going to vary to some degree, and it's going to be a buyer expense because it's the buyer that's triggering this report, right? So it's just something you could negotiate a seller credit for if you wanted to, or some version of something there, but it's the buyer side.
Are you at any sort of point yet where you could guesstimate if we're talking hundreds of dollars?
Well, like Greg said, Alta has told us they're estimating this will add about 4 hours of our time in completing a closing, not just paper signing, but the coordination of it for the buyer, for the seller, for the frustration following up, right? And the submission to the feds. Now, there are tons and tons and tons and tons of vendors coming out that we could work with, right? That will gather the info and submit them. So the cost of those we can see are somewhere between $50 and $100 per closing. That would charge the attorney, who's also going to have some time added to that. So, and then you could see somebody who does this entirely manually, where 4 hours of time is an additional $300 or $400 on the closing side. So I think we're probably going to see somewhere between 150 to 400.
And there may be shown as like a collection coordination charge and then a submission charge. So because there may be broken into, we get this part to do that part, this part to do that.
And so that'll be one of the buyer's first questions. So I want to make sure we weren't talking like $750, $1,500.
We take tips and we're happy.
Yeah, absolutely.
But certainly until we sort of get into this and we can start seeing what everybody's charging besides, us, I would just ask if they're going to work with that attorney.
The important clients are the already doing requirements. Like, we always tell our member be the source of the source. Don't overspeed, don't maybe not always maximum law. So I guess that I just throw it out that feels a little broad. Like I think it's more like recognize the trigger and something you guys to clarify the rule and
I'd be saying it's coming. You're doing a cash deal after March 1st. There's going to be stuff here we're going to have to gather. We want to warn you about it that it's going to be a requirement. We're going to connect you to the closing attorney. They're going to gather the information from you, or they may ask me to get stuff from you, and I'm going to be prepared for filling out, supplying, and providing all this information.
And yeah, I think we were talking earlier. There's going to be a way to the buyer agency agreement and the contract for that too. So
Yeah. Well, and what's right now, we are auditing all of our closings that are occurring in March already under contract that are going to be here to get these reports out and start to get them coordinated. I'd say if you have anybody that you got a buyer on the line, even if you're just taking them out, showing properties and it's all residential you're looking at, and they're not coordinated with a lender. And if they tell you they're working with an LLC, it's just, hey, there's a new reporting requirement out that you have, if you have an closing, that's new to all closings, that might be applicable to you. And it's going to require additional reports. And it's just a pre-disclosure, really, I think.
And this next slide, I think, is going to really be helpful. There we go.
We made it somewhat of a flow chart for you guys to use. To Matt's point, not that you have to be the attorney, but you have a tool here that sort of goes through a checklist, right? If it's yes, as to cash buy or non-financed entity buyer residential property, and then no on these exemptions. I just point out on these exemptions, right? When we talk about transfer to bankruptcy estate, this is not sales coming out of a bankruptcy. These are not court-ordered sales. They're coming to the bankruptcy or to the court system as a requirement. Does that make sense? So it's more about the way it's coming in. These aren't, if it's already in a 1031 or already in or coming out of a court-ordered sale.
Like what you're saying again is that hey, you don't want to overwhelm people. You're just saying, look, this might fit. I'm going to connect a lawyer that's doing the closing. We're going to go ahead and confirm what if he'll have to do, because there's a lot, even though things are set out that way, there's a lot of, well, if this, then this, if this, then this. And we're going to be back with filtering through those. Does it qualify? Does it not? It's so close, we have to do what we say. Constantly based on what we say.
So that's just something to have for you guys to use. And then I already mentioned that noncompliance is just subject to civil and criminal penalties. Some of them are really big criminal penalties.
Looked them up. I spent last night focusing on those. So I go, oh, damn.
It's just a problem.
Again, remember the objective of this rule. So can you imagine they're trying to get at people that collude with these people to not do this reporting? Penalties on us?
Negligent mistake is $1,430 per. Or if you're doing it a lot, you just screw it up a lot, and it looks like you have a pattern of activity, it's up to $111,308. Now I wonder how they came up with this bloody number. Instead of say, let's make it $1,500. Let's just make it $150. It's 1430 to 111,308. That's for negligent with a pattern of activity. If it's willful, it's $71,545. With a maximum, if you do it willfully a lot, $286,184. And if you're doing it willfully, you're highly likely to get charged criminally, which is 5 years and $250,000.
That's
It could be either or button based on the judge's discretion.
So you can imagine where our side of this is, we are going to report. We don't want that. You don't want it. We don't want it. Our buyers don't want it.
Every closing is going up $1,500.
That's right.
Every cash.
Oh, you okay?
Fees for just the buyer or everybody, or the reporter, or everybody involved?
Buyer and reporter. Report the person responsible. This responsibility is on us to provide this to the feds. They aren't looking to the criminals to provide it to the feds. They're looking for people who can be
We're
accountable.
looking at you guys, but then that's not getting printed down to the potential person that could fund.
Yeah, and and to our extent, what they provide us is something we're allowed to rely upon. So if they're going to lie, they're going to lie. But then that liability lies with them.
But yes, and it's nationwide. It's every,
Yeah.
It's Puerto Rico. It's any United States affiliate. It's anywhere that the U.S. is one of our part of our country. Anything related to it, got to follow. And so it's title companies also. It's whoever does the closing services basically is going to have that responsibility.
And so states are looking to make addendum or parts of their contract to apply to this. In the same way, we have a current contract condition that says everybody has to comply with 1031 related transaction requirements. I think it's going to be another little addition that says if it's going to be a FinCEN real estate reporting rule transaction, the parties all have to comply with the requirements. Until then, the reason we say don't delay is because this is not a breach of contract. However, we will not close. This is not a contract condition, but we will not close till we get this. And so it's on us to be like, really, 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 really tell people, you got to do this. You've got to do this. And we are going to be sending it out as soon as we know. As soon as we know. I'm not waiting until right before closing. I'm not waiting. This doesn't hurt us to get it early. So the sooner the better, just so we don't.
We get 111,400.
That's right. So the bar here, the real estate commission here says it will be something they're going to put in the July contract updates. We can draft a custom addendum if we want it in the meantime. If we're worried about that risk, we can draft them. We've done it ahead of the bar before, so.
But there may be some slight risk between now and July as far as who the delaying party would be as
Exactly.
this comes up.
Right.
That's a good point, real good point about the delaying, right? Because I know you got a 7-day window right now. Now it's going to be everyone pointing, well, he wouldn't give them their information time. No, she didn't give her information time.
And then the significant portion of our population that doesn't want to give the government any more information.
I've seen that happen many times. I'm not closing.
I'm not doing this.
Right.
Yeah.
Right. Which is, and so what the way that the actual clients are going to experience this is going to vary depending on which attorney's office is coordinating it. There are federal checklist kind of fill in the blank forms, PDF forms that your clients might get that need to fill those out and return them to the closing attorney. We have a system that's going to send out web forms essentially, or secured links where clients just go in and enter the data, buyer, seller. They get automatic replies, and don't forget to do this, like follow ups. And then we submit to the feds ourselves. So the client experience here is pretty easy. It just has to be done.
What kind of data is required? What are you going to ask?
Names, address, phone number, social, stuff. Purchase price.
But it's socials or passports or it's just going to try to tag who are the owners inside this company, what's their identity.
Did I hear you say earlier, account numbers?
Yes, funding sources is going to be account numbers and bank, or the financer, their account number, bank, contact. So very specific. And then it's going to be okay if a client changes their funding source before closing. I know sometimes that will change last minute. We just send this back out, get the form updated or the information updated. So it can be amended. So if we do it early, let's say, and some information changes, particularly funding source, we can amend it, we can update it before we submit it to the Fed. So we won't submit it till closing.
The crazy thing is, it's going to be all the good guys who fly this
Yeah.
fast. And then all the bad guys are going to just
I
find
know.
a different way to do this.
They will. And then they'll be new if they still want to.
And it's going to be probably a lot of the fill out parts of it, not all of it, kick it back, right? You got to give it to your point, right? I don't want to give it, it's just going to be kind of a push pull for a little bit.
Or you're going to have someone as old as me who doesn't do anything on computers much. And then they have a kid who can get on there and help them fill out all this stuff and log it in and send it in. Now it's just another headache. Someone's going to have to go sit with them while they get on. I'll bring a computer and we'll type it in and then send it. And then it'll bounce because I forgot I did. That was not my address. Then that's not, I gave you the wrong. I put my social numbers.
I just fax it all to you.
Well, yeah, please make it easy.
They got those people who say, well, I'm just gonna bring cash.
I had that.
Is it gonna be like with the lenders where they say?
Yeah, just all takes up on that. It's over 10 grand. Believe me, we're doing it.
Oh yeah, they're not bringing
But
cash.
it's gonna mean they can't purchase it because it's not like in a bank or seasoned or like the lenders do when you're trying to like.
Well, if anybody brings us $10,000 in cash money or more, we have to do a ton of federal money laundering reporting anyway.
And then the social security thing, if they, let's say there's somebody like, we have people who buy things that don't actually have social security numbers. Is their passport number gonna get
Yes.
through?
Yes, you
legitimate pass.
can there's quite a list of what the ID components are, but think of just any federal kind of primary identification. So security numbers, not cards, the number. It could be passports, U.S. passports, foreign passports, EINs for entities that are either domestic or foreign. So it's just to get to who these people are. So we won't have to upload. They won't have to upload their IDs. They just have to put in the dates, let's say the passport number, right, and the territory. So it's to get the information. It's not really like technological. It's just fill in this data, get it back to us.
And just to clarify an earlier point, buyer is buying through an entity, but the seller is just Joe Williams.
Yes.
Well, so it could be an entity and we have to collect them from the same kind of.
Right, but in the case where the seller is just a regular person, their requirements for this are.
They're still going to need to just identify themselves as an individual and who they are.
That's it.
That's it.
That's it.
So functionally, with you guys specifically, we send a client to you. You guys, they sign, have you guys represent them. You guys are going to send them a questionnaire.
On an electronic, they can fill in.
Yeah, we are actually which will go out first. Everybody's going to get when we get a notice, right? There's going to be an email that goes out that says if we're been given information that looks like this transaction is going to involve a real estate, residential real estate reporting requirement. And the buyer and seller, you're going to get emails with links to fill in your necessary information. Then emails will go out to them automatically with a very simple link to click to fill in their information, and that will automatically submit back to us. And as long as it's got all the right information, then we're done.
And I-
Client is done, his user experience is done. We're gonna report those to the feds on the backside.
I don't know this, I'm gonna spec, does it go back to them with success? You've done it?
They won't be able to finish and certify if they don't provide all the information.
But once
And it'll bounce if something's wrong. Yeah. And then any attorney, like another office, imagine they'll send out a PDF form to the client, which is the standard form that's out, the feds have given us, that the clients will either print out or web, PDF complete it and digitally sign it or physically sign it because they have to certify the information in there. Not every owner within those companies have to sign, but one participating reporting person for that entity. Okay.
Because everybody in that gets reported though.
They still get reported. Yes.
Everybody.
Their identity gets reported, but they don't have to actually sign or do the forms themselves too. We don't have to
One
get
person can supply for all the 25
Correct.
beneficial owners. Like if there's a manager and then there's 3 other 25% owners, that one person can talk.
Think of a trust and the beneficiaries, right? And again, we're not talking about state planning trust, but like a land trust or we talked about Roth IRAs, which are entities that are investment trusts. So stuff like that. You have any other questions?
No one choked on lunch.
I know.
You're pretty good.
On the broker
Go ahead,
end,
Lisa.
one of the main things I'm just gathering from this is it's stressing it's even more important now when we're filling out the offer on how we'll plan to take the,
Right.
like, if you think there's any chance that you might switch this into, you want to switch this into a trust or an LLC before closing, it is very important that you have that discussion with me and your paralegal ASAP.
Right.
Is there anything else that is just trigger conversations that just for us to have with
Change your financing.
change the financing?
Yeah. And then what I would say a lot of people will do is like, oh, I'm just going to close my individual name and I'll just transfer title later. That's not going to change it, right? I already told you.
If they transfer.
Transfers later.
That triggers it.
For no value
Yeah.
are also
Right.
going to trigger this reporting. So they're not just going to skate out.
We will
Okay.
be out of that.
Ultimately,
Yeah.
They
you will.
still have to.
Right.
Yeah.
But to the client, right? That you're not going to get away
Right.
with anything here. If you
Yeah,
just,
there's no water.
That's it.
Yeah.
That's when you'll say to us, oh, well, I'm leaving here with Greg and Beth. And I'll actually end up-
yeah, you're like,
Very much.
take your individual name now and they'll transfer it for you later.
That's it. Thanks, Beth. See you later.
So basically, if they kind of allude to anything like that, we need to just go ahead and tell them that, listen, you may as well do this now because you're not going to be able to transfer it later without this.
You're gonna do it either way.
Applying and you spend more money now.
Well, yeah, I mean, it'll, one, you have more money to do the second conveyance in deed work for us to do the second conveyance anyway. And you're paying the reporting fee at that point or this point anyway.
Save on the front end and just knock it out there. Yeah.
Yeah. And in the language that we're expecting to come out on our end of things should clarify who is responsible blank parking wise if something like this comes up.
It's gonna say that they have to do this and they're gonna probably have to do it by a certain date. At least by the closing for at least, otherwise they risk be considered the defaulting party.
And that's where we just want everybody to know about this so that we can help with the messaging, right? When the client's like, I don't want to do it. We are saying you must do it. You guys are saying you must do it, right? The more of us that say this is here,
Not optional.
right, the better.
If you want to buy this property, you must do this, or it's not.
It's mandatory.
And certainly, right, we are here to help them understand it too, if you get in a sticky situation. But this is also just to give you a resource so that you're prepared.
And like I said, Beth said, she's brilliant. She's been putting together an engagement letter, information about this. So it's going to go out to them to explain it. And so when you send in the file, we're going to pick it up and say, we smell this. By the way, you granted your reply to this, and it's going to be there with information to help guide you right out of the gate from the new file. So we're going to be on that out of the gate as well, because we don't want to be sitting at the table with them either, or fooling around trying to gather information at the last minute when we can write it up.
Yeah, because like I said, our protocol is going to be as soon as we know these are possibly all the elements to require this. We're going to send them out. we've got reminders to follow up on those automatically set all the way down to closing where it's like, and you must do this now. We are going to delay closing.
Just clear the listing.
So the point is to make it easy, right? To just put it out in front early so that if we get some pushback, we know we can work on it and get it done.
You're the listing agent and you see us sending out an email to everybody saying, by the way, we need this information. We got it from the seller. We're trying to make sure you're all aware. Please, I need you to help us browbeat that other agent to browbeat their client to get us that information.
Yeah.
We just, because it affects us all. And it's going to delay the closing and it creates another, frustration that we can avoid, which is what we're just trying to do. We'd rather have a smooth transition. This is nothing but a thing. It's form. We got to fill it out. We got to give it up. It's life. Let's do it.
So the form's not available right now, won't be available tomorrow.
It is. Yeah, the forms are, if you go to FinCEN's website, all of their forms are online. You can look at the residential reporting rule forms that they have.
So someone representing the buyer, I'm sending over the offer today.
They're not very
They're
user
good.
friendly.
They're going to put it in their names right now, be the deed, but probably about a month later, they're going to put it into a trust.
Well, if it's going to be a month later, with the trust, right? If this is for estate planning purposes, that's going to be an exemption. So the consult there is if that's an entity, you might just want to check in on whether or not you might have a reporting requirement there, and put that on us to get the information about the trust to know that's going to
We'll
be.
take care of it, especially if we're going to be doing a deed to a trust post closing, because we're going to be involved in that question.
Right.
Anyway.
Right.
Well, there we go.
Yeah.
Didn't Beth do a good job? You got a lot over here, comedic relief.
Thanks for that.
Well, we're here and thank you guys for coming. Thank you for caring. Thank you for your attention.
Thank you for the handout for lunch.
You're welcome.
We thank y'all as well. We really appreciate everyone that's so supportive of us. It's a great blessing. Thank you all.
I need to do it.